Good morning. Hopefully everybody can hear me. I'm not too good with the technicals. So yeah, I'm back. Been 4 years since I probably did my last live stream, and I decided to bring it back because I have been day trading. Quit my job about a year and a half ago, and I have been day trading ever since, just making a living off that. And so I said to myself, if I'm sitting here 2 hours a day every morning, or sometimes more, I might as well be streaming while I'm doing it. So yeah, this channel is going to be 8:30 to 10:30 every day, Monday through Friday. We're going to focus on crypto, but most of the time it's going to be mainly focused on New York Stock Exchange and day trading. Volatility in the crypto market is drastically down. There's way more opportunity to make money in the stock market right now. There's plenty of volatile stocks. The plan is going to be every day at 8:30 when the stream goes live. I'm going to try and spend the first half hour from about 8:30 to 9 doing some education stuff. I'm struggling to figure out where everybody's level is, whether I'm going to start off real basic with what a Japanese candlestick is, or if we're going to get into complex things like ICT, fair value gaps, things like that. And then from 9 to 9:30, we're going to do some pre-market scanning, look at some possible setups, some stocks that are moving. And then I'm going to be doing some live trading live, where you're going to see whether I'm losing my shirt or headed to Sizzler. But I'm going to post my P&Ls live so you can see whether the day is doing good or bad, and the positions that I'm in, what entries I have made, etc. That will be all on the screen. And then, I'll probably shut it down around 10:30, possibly 11. But 10:30 is not necessarily a hard out. Depends what's going on in the market. And I'm going to try and do it pretty consistently, Monday through Friday. So this morning, I thought we would go over some BTC macro, because I know a lot of you are really interested in what's going on with Bitcoin. So we can start there. Then we'll get into some pre-market scanning for New York Stock Exchange Open. And then we'll go into the live trading. And I have a friend I brought along with me, Rick. I don't know if you can hear him. Rick, say hi.
What's up? How are you? Welcome back to YouTube.
Razor blades.
Razor blades. It's 11:34 p.m. here, so I've had my coffee. Just so I'm
you gotta have a whiskey, Rick,
for this. Yeah, I know. Maybe I could spike my coffee.
All right, so let's see here.
So,
I was thinking, Rick.
And
before we get started, if somebody in YouTube chat could just acknowledge for me whether or not my voice is coming through twice. I don't want that. How's the audio?
Yeah.
Can I get a thumbs up
or a
good
technical check?
Tech check. All right, well, I'll keep going. If anything's wrong with the audio, somebody in chat, let us know, please. Okay, so here's the screen. Here's Bitcoin. I figured what I would do is go over on a macro level where we're at with Bitcoin, and then Rick would also kind of jump in and give his thoughts. One of the things I was talking about in Discord recently was fair value gaps. Basic charting, there's trends, support, resistance. When you get into more complicated things, you'll understand that the way that the some people call it the algorithm or smart money, the way it functions is with liquidity grabs, basically, and fair value gaps, also known as inefficiencies. So, for example, if we go back to the previous market here and the run we made to 69K, you'll notice, well, I guess first let me define what a fair value gap is. This right here is what would be known as points of interest. A lot of retail is in there. There's accumulation or reaccumulation. But the way smart money actually moves is it tries to eliminate stops. And it does that not because it's being mean. It does that because it needs liquidity to move the market. So, for example, if you go over here when it dropped in May of 2021, if you were going long here, you would imagine that most people would have placed their stop losses probably somewhere around here, right? And so what smart money has to do to keep this market going is it has to get rid of those stops. And the way it does that is right here with these wicks. It eliminates all those stops. And the way they make these power moves is they make them with what's known as fair value gaps. And a fair value gap is defined as a 3-candle pattern. You could have it right here, 1, 2, 3. And you'll notice that if we take the base of this candle right here and the top wick of this candle, there is a gap there where it never really got traded in. And the purpose of this fair value gap, this is a bearish one, is to eliminate this liquidity here, eliminate these, whoever has stop losses. And so if you go back to the 69K top, you'll notice that it's just a whole bunch of bearish fair value gaps. Here's a fair value gap. Here's another fair value gap. Here's a big fair value gap. This one took out all that liquidity there and eliminated any stop losses that were below that. And it just keeps going and going and going until you see something like this called an inverted fair value gap. Here's a bearish fair value gap, again, continuing the trend. And this is when you start to know that the bottom is in. You get a bullish fair value gap. And these two things combined are called an inverse fair value gap. This is when you know things are headed to the upside. In a downtrend, what you'll see is bearish fair value gaps disrespecting bullish fair value gaps. So, for example, here is a bullish fair value gap. And that got completely disrespected by this bearish fair value gap. Like it didn't even care it was there. Trend continues to the downside. In this case, though, when we got this bullish fair value gap inverting this bearish fair value gap, now you start to see a whole cluster of bullish fair value gaps. Let's make that green. I know Rick is all about the proper colors here on the screen.
Yeah, it has to be the right colors. Yeah.
Exactly. So another bullish fair value gap, another bullish fair value gap, big bullish fair value gap, right? And it just keeps going on and on and on until you get to the top here, which is where problems started to occur. This, some people would call it a pretty classic Wyckoff distribution. Let's just make that gray. Up here, what you saw was an upward thrust. And then once it broke 108K, especially breaking this 50-week simple moving average, that's when I was out. And I announced on Instagram, I'm done. The 4-year cycle had kicked in. We saw a Wyckoff distribution. On an ICT level, we saw this. This is a swing failure pattern. A swing failure pattern is basically like on the bullish side here. This is your liquidity point in this example right here, right? When price wicks down, and it can be on one candle, but then goes back up and closes above that low point, that's a swing failure pattern. And that's usually a bullish signal. On the bearish side up here, you can have a 2-candle pattern, same concept, where it swings up, takes out that liquidity, didn't close above it, and then the second candle was bad news. And this was the week of, I believe, October 10th, right? That was, let me go to the daily chart.
Yeah,
that was the big scam wick
the
there.
6th. Yeah,
Was
the
it the
all-time
6th?
high was the 6th, and then the 10th was that really nasty sell-off. Yeah.
Mm-hmm.
Yeah.
Exactly. Now notice after we broke this structure here, I don't know why it's not showing up. Whatever. What do you got here? Rick, what is that?
A bearish fair value gap.
A bearish fair value gap. And where did that bearish fair value gap? What was its goal? It was to eliminate all this liquidity.
Yeah.
Yep. And it makes moves. So if we go back here, inverted fair value gap, do we have anything like that right now? We do not. This will continue. Nope. And this is not a liquidity sweep here. What happened on the week of February 2nd did not really accomplish anything. All it really did was go to this heart line of this point of interest, this reaccumulation. This was the ETF reaccumulation. Or no, I'm sorry. Yeah, that was when we went to 70K, right? Yep. This was ETF reaccumulation. This was the Trump pump. And this was, we're going to the moon, boys. We're over 100K. This will continue on a liquidity hunt until it reestablishes new liquidity and then puts in an inverse fair value gap. The next target, because this is in context just floating in midair, is this liquidity right here. And anybody who has stops below. Those who believe that we're going down and we're going to find some sort of support here don't understand how markets work. It's not going to come down here and then magically bounce because it doesn't have the liquidity to do it. It needs to, at a minimum, at least spike a little bit below here, clear out any stop losses. And let me say this. You, me, and our friends and the people listening who are dealing with $10, $100, $1,000, $10,000, we are not movers of the market. We are the ammo that the smart money needs to move. So now imagine you have like $1 billion or a couple of million, and you want to make an entry into the market. The only way you can enter the market and put $1 million in is if somebody's selling to you. And you need a lot of shares. You need a lot of coins. So where are those cells located? They're located right here in stop losses. So that is why smart money brings down price to gobble up your stops so they can actually make their entry. And then they take it up. I'm personally currently working under the theory that we're probably going to see a bottom around 45, 48K. There is a unmitigated fair value gap down here around the 30s. That is a bullish fair value gap. The expression you've heard, gaps fill in. The gaps always fill in. People think that that is really when in the New York Stock Exchange, when between close and opening, over the weekend, the price shot up $10. That's not really what the term means. That's a misconception. The gaps always fill in is referring to fair value gaps. Fair value gaps are inefficiencies in the market, and the market is always looking for one of two things. It is either looking to correct those inefficiencies, i.e. fill in the fair value gaps, or B, it is looking for liquidity. It needs those two things to function, and those are the magnets of the market. It's either going towards one or the other. The other thing the market loves is equal highs and equal lows. If it can target an equal, we look at it as retailers as a double bottom, right? But oftentimes when a double bottom comes in, there is a manipulation move that takes place before it actually makes the move to the upside, which I'll get into another day. Accumulation, manipulation, and distribution. But yeah, that's just kind of a preview of what's going on with Bitcoin and the type of stuff I'm going to be looking to teach. This is more on the complicated side. I'm going to try and, I think, bounce back and forth between more advanced stuff and then maybe the next day more simple stuff like a Japanese candlestick, or how a trend line works, or what an SMA is, and then maybe the next day go into more complicated concepts like order blocks, broken order blocks, things like that. But yeah, now what I'm going to try and do, if you're ready, Rick,
Yeah,
I'm going to try and
I'm ready.
pop over to the Discord here and see if you want to give us some of your thoughts. Let's see if this
All right,
works.
you want me to put my screen up?
Yes. So stream your chart.
Yep. Right on. Can you see all the blue
And I
lines?
think that's working.
All right, cool. Let me just double check. I'm wondering what level the delay is. Like how many seconds? I think it's a few seconds. But yeah, now I can see it. Okay, cool. All right. So basically what I tend to focus on and cover in whenever I sort of stream or do a technical analysis is fairly high time frame stuff. I guess my specialty, or what I've focused more attention in learning, is not as much the scalping, although I do want to get into that. So you could probably teach me some of this fair value gap stuff because you understand it way better than I do. But yeah, mine's more so the basics, like, for lack of a better word, the real simple stuff. But the good thing about the simple stuff is that it's fairly strong, in my opinion. Like, it gives you a pretty good framework to build off. And if you're kind of ignoring the fundamentals and like the basics, and you're skipping all that and going straight into something technical and complicated, you can sometimes miss some very clear and obvious stuff going on and wonder why you got stopped out or whatever. So it's good to sort of have a bit of a holistic approach and start higher time frame and then dig into the weeds of the market. But as far as Bitcoin goes, since we're talking about Bitcoin, let me open up an index chart, and I'll go to like the weekly to begin with. I'm just going to touch on like the whole cycle thing because that seems to be a pretty popular sort of way to understand Bitcoin, to do with the halvings. It's mostly around the halvings, but there is a very interesting feature about its distances between the most recent all-time highs, all coming in very basically equal distance as far as timing goes between each other. I do have measures somewhere in here. Let me just see if I can find that. High to high. Basically, let's call it 1,450 just to round it off. It's around that distance between all-time highs. So, and then you've got basically low to low, so bear market lows to bear market lows, which is also around that 1,400 to 1,450 days in length. So basically this last one is a projection. This is not confirmed yet. We don't know that that's going to be the bottom. But the very fascinating thing is it always tends to come in, at least in the last 3 times, the distances have all been eerily close to each other, not to mention the tops. Actually, to more precision than what the halvings have between them. The halvings have a little bit more irregularity, but the tops and bottoms have been strangely close and similar. So this, basically, the way I'm going to be playing it is the way I kind of almost played last cycle. I had the idea, I didn't commit as heavy as I got it that I'm committing this time around, which was to dollar cost average, the loss of velocity in the dumps. So what I mean by velocity is like the first dump had a certain degree of velocity. The second dump, it was probably arguably even faster. Let me take it off logarithmic. I'll go linear. to show it, but these first two dumps pretty violent, and then the subsequent corrections after that. You can see there's not a lot of liquidity left, or liquidations to unwind, basically. So these initial ones, it's a lot of hot air. The market's full of derivative volume, and it's completely unwound, and then it starts to turn down, and then that's kind of a sign that things are drying up and volume's dropping, and it's really good accumulation season if you're playing the cycles, basically. So accumulate somewhere near here and then distribute it somewhere up here. You can even distribute these couple of highs here, not the whole way out, but you can trickle, edge your way back out. But with the timings in mind, like this, it is like, obviously this can break, and when it does break, I think a lot of people are going to be talking about it, including me. But so far it hasn't broken. It is adhering to this schedule, and I'm thinking a low to this cycle comes in, prepared for that to be wrong. But if it's anything like what we've been getting, it should be like around late September, early October, somewhere around here. Now, price-wise, that's another story. If you're talking price, timing's one thing, but price is another. And if I go to a linear perspective, I might just draw these in because I don't know if I've got these lines pre-existing, but there's an interesting line to the top that comes from the 2017 all-time high of 20K. If you take that through, let me just remind myself of when that was. Yeah, the 65K high. Obviously, there's the 69K high as well, which was the higher price level, which still got a reaction, mind you, over here. But let's draw two in. Let's draw one for the 65 and then one for the 69. You can see you still get price activity off both. And this is the power of trend lines. Like, don't fade them, I guess, is the kids are using these days. Don't fade trend lines. Don't underestimate them, because they're pretty powerful, and a lot of people do use them to understand structure. Like, not so much structure, but trends, to put it simply. But all right, now there's an underside trend line as well. I might have to put it on logarithmic to nail it, but let me just try this out. So there's an idea. You've probably seen a chart that looks like this before, but one targeting that is going to come up is if I open up the highs and lows. If we hit this bottom trend line here, then our bear market low should fall somewhere within this bubble right here. If it's going to play out like to this trend line here, which is, I know it's a stretch because we've only got like two key touches. And if you take it to, this is where I was going to use logarithmic. If you take it to the bear market low of 2018, changes the target a little bit. All right, we'll lock it there, go back to linear. It actually makes the target deeper. But anyway, that is just one idea about where you could be looking for prices to go. Now that's at around $30,000. There is actually a little bit of structural context to that number as well. You've got a lot of price action. There's a lot of history at 30K. It's like
what's the
very critical level.
That's non-log, right?
Yeah, this is linear.
What's the 78.6? No, that's fine. What's the 78.6 fib retracement on that move? Because Jarsky always likes to point out, and he's correct, that on linear, Bitcoin always loves to come back to that pocket.
Yep. So at least in the last or the last bull market that we got, it retraced in its bear market down to the
78.6.
786 fib level right there.
So this time
So
around, that
if
would
we
be
get a
about
repeat of
40K.
that, yeah, 38, 40K roughly. So yeah, I would keep I guess keep your options open. Don't put all your eggs in one basket at a certain level. Taking an average approach back in, if you plan on playing the cycle like I am, which is longer term, like building a position. I've already started. I started back up here with a few small buys. Actually, no, I didn't. I started more like down here. Yeah, it's around here anyway. Go back to the daily. So if you let this, I'm not buying any more around this 60 to 70K range. I'm just going to wait until the next hopefully for the next correction. I do want to get it cheaper. I love Bitcoin. This is not me saying it's going to zero or anything. I just want to see cheaper prices for the sake of getting into it. You know, I wouldn't be getting into it if I didn't believe in Bitcoin. So I'm certainly getting into it. Not financial advice, of course, but this is what I'm doing as far as like a cycle play is concerned. And yeah, that 786 level, it's 38. That is a nice reason to get in, or a nice area to target at least. There was also this thing that I was looking at, which was from the all-time high. Let me hide that vertical line. From the all-time high to the basically the relief rally or the dead cat bounce off it, there is a one-to-one target, and I don't think that's quite hit yet. So this is a Fibonacci extension tool, and we've hit the 786 of the extension. We haven't quite hit the one-to-one, which is at $52,000. So it's just down here somewhere. And that would get you a retest of this support structure over here, which was our 2024 bull flag, basically. So yeah, from a market structure perspective, we've lost all structure to the upside. Depending on what context you're looking at the chart in, from a weekly context, I think the last line of defense was $74,000. So this low here, basically market structure is maintained in a bullish sense if your highs maintain higher lows or at least equal lows. You've still got your bullish structure, but it lost it right here. As soon as you broke this last pivot point,
Yep.
you've now lost that bullish structure. So that's the weekly chart. Every time frame has a different context. So you could go down to the 5-minute chart and find bullish structure. Like, look, here's some here. You've got a low here. You've got a higher low here. You've got a higher low there, higher low there. So that is an uptrend, even though we're in a bear market. It's, context is everything. There's a lot of contextual things that you have to be aware of when you hear someone giving TA. They might talk about bearish sentiment and bearish things, but it could be completely melting faces and going up on the 5-minute chart, for example. So yeah, anyway, as far as like what we're stuck in right now, this range between 60 and 70, there hasn't been a resolution just yet. It's kind of just been tapering down. I think I've got a channel. If I go to the 5-minute chart, you can see it, 15. We've just sort of been like bleeding out, grinding down in a channel. We did try to make a pretty confident attempt to break out through the top, but that got stopped. 70K was basically the best it got on a wick, and then we basically back into the channel. Look at that respect of that line, that trend line there. This is what I was saying about trend lines, is that basically as long as you've got 2 points, that's at least a start. But then when you get a third touch, that's confirmation that there is a trend there. This made it a little bit murky. You couldn't quite see it, but then you had like arguably 3 and 4 here, touch, and then a 5. So I think this line is still very much valid and causing resistance to Bitcoin until it breaks it convincingly. And that hasn't happened yet, in my opinion. And same with the bottom side. Like you've got 2 pretty key touches here. And that could possibly hold the price. If price comes back down to that trend line, a trade could exist off that price action. So trend lines are, they don't say when, but they say where. They say where price is gonna get into contact with it. And let's say, just hypothetically, if price was to do that move, it's not about it kind of gives you at least a reason, a structural reason for entering, say, a long based off, a repeated behavior of bouncing off it as support. And then your stop loss is basically, when that gets invalidated. More into what sTAtic was discussing earlier about swing fail patterns and liquidity sweeps, stop hunts. Wait for that to happen first, because that usually does happen. Things do get tricky around trend lines, and they can be the tests of a trend line can be quite messy, like kind of what happened here. You could argue, there is an argument to be made that that push there was to sweep the highs of this move here that came up and recovered.
And the one over to the left there, right at the edge, that wick.
Right.
No, to the right. Left,
this one?
Yeah, swept that too.
Yeah, like a retest. Yep. So, yeah, that kind of activity, you sort of have to almost expect that, or at least be suspicious of that happening. This is a really nice one, actually. This pivot right here basically looks like a W, with the second sweep getting just lower than that previous one. So if you were getting long in here, a very typical and common retail spot to put your stop loss is just below the swing low, and then this would have stopped them out.
That would be
hunted them out.
Yep. What that's the what's called AMD: accumulation, manipulation, and then distribution. So what you had just highlighted was them accumulating, then they manipulated with that wick to grab liquidity, and then they distributed.
Yep. Send it off.
There is never a situation where a pattern that's a bullish reversal pattern, for example, takes off without a liquidity sweep.
Yep.
I mean, there's an old adage, no manipulation, no trade. Meaning if you don't see manipulation, don't enter. Or classically, what you got there, people in the Wyckoff world refer to that as a spring test.
Right. Yeah, I remember roughly. I've got a very basic, primitive understanding of Wyckoff, but I know that spring effect. Like the spring is like the last ditch effort to the opposite side before the real move happens in the opposite direction, the other direction, new direction. I think Rick, you should cover this in future videos, this AMD thing, this accumulation, manipulation, distribution. Very helpful. Yeah.
Definitely.
All right.
It is 9:05. Market opens in 25 minutes. So I thought what I would do is kind of go through the process of pre-market scanning. Is that cool with you?
Nice. Yeah, go for it.
All right, let me switch over to live here. Close the Discord window so I can see. All right, so basically what I do every morning is I look for the movers pre-market. I've got this set up. Pisky. Huh. That was a great trade I made. What is today? Tuesday? Here, I'll show you how this trade went down. Let me find it. Just a quick sample of, I guess, what we're going to attempt to do today. At market open, this green box is the opening 15-minute range. And typically, if you have a bullish daily bias, a breakout of this range to the downside means you're shorting. To the upside is typically a long. A little bit more complicated than that. If only trading was that easy, just wait for the box to break and then enter your trade. Doesn't quite work that way. Trade here, the reason I entered, and I entered right after this candle up here, and I'll show you why. Initially, we have two fair value gaps. If you get two on top of each other, that's usually a pretty good bullish sign. One doesn't necessarily mean anything. What I did like about this as a setup is here's your bearish fair value gap. And then we got the inverted fair value gap right here. But we're still not ready to enter the trade because up here we have what would be called a bearish order block. And a bearish order block is defined as basically the first down candle rather of a trend here. This is now your bullish order block, which I've got this set up to automatically highlight it. Oftentimes, eventually, this stock PSKY is going to end up returning to this order block down here. And if it finds support, that's an excellent place to make an entry. So one thing I would do is I would set an alert here so that at some point in the future, I get alerted when it comes back down here. But reason I entered this trade the other day after this candle is you'll notice disrespected bearish fair value gap, inversion, more fair value gaps, and then right here, when it broke this bearish order block, that is now what's called a broken order block. And you'll see this is kind of a peeking behind the curtain of how the algorithms actually work. It's more complicated, but in some ways easier to understand than basic support and resistance. Many traders would look at a chart like this and go, here's our resistance, and we broke resistance, and we found a little bit of support, and then we took off. But the way to actually look at this with the candlesticks is this bearish order block that led to all this damage got broken, closed above, and this is where smart money entered. They entered right here, and notice it hit precisely the 50 fib. Shout out to Jason Turbo with his 50 fibs. 50 fibs are very powerful. This right here, with increasing volume above the moving average, which is this white line, that's an entry all day. Enter there, set your P&L. Set your stop loss at the base of, where's the fair value gap on this one? Right here, very tiny one, I think. Yes, barely. So set your stop loss below this candle right here. And then target whatever you want to do. Start with a 2-to-1. You can take profit when it hits there. Notice how it's almost like the algo knows that everybody's doing 2-to-1s, because coincidentally my 2-to-1 from there is right where the candle closed. But another way you can do this, which probably the most successful traders do, is they don't close out at a 2-to-1. They hold that order open with their stop loss here, and they wait. And they do what's called shelving. So basically, as this thing continues to run, it establishes shelves. This is a shelf right here. So what you would do is then you would move your stop loss up to this point and then wait for another shelf to form. There's your next shelf. Move your stop loss up. Here's your next shelf. Move your stop loss up. And by the time this trade is finished and takes out, you probably would have moved it here when you saw this bullish engulfing. And then you would have gotten knocked out right here. You would have ended up with a 11% trade, which is a 7-to-1. I believe, where did I get out? I think I got out right about here because I had to go do something. That's another rule. With day trading, I don't like to leave any trades open. At the end of the day, any positions I'm in, I'm out by the close of the market. Except one day, I don't know, Rick, if you remember, like a month ago, I accidentally left a position open on a silver short, and I was freaking out. I woke up the next morning and I was up. I was like, woo.
All right. Yes. I think
I lost track of time.
Yep.
I'm like, oh my God, the market's closed. All right. So this is what we do. $9.12. All right. I'm looking for volume. That's another interesting point here. Let me show you here, BATL. Oh, a little bit more information. Let me show you this before we get into that. A couple of these things are indicators I've built myself, and some of them are other popular indicators. Lux Algo, Smart Money Concepts is a really good one. I have a indicator by Lux Algo that just alerts me on any chart anytime there's a breaker block, liquidity swings, etc. And then a couple I built myself. But just for context here, this white is one of my indicators. Basically notifies me when there's swing failure patterns. Swing failure patterns can be pretty powerful signals for a reversal. You'll see here, this one went up, this one went up, this one went up, this one up, but you don't want to be taking trades every single time you see this. You need additional context. Premium, discount, equilibrium, it's basically just the fib. Equilibrium represents the 50 fib. Sorry, phone call. Premium is just your current high. Discount is your current low in a range. What else we got on here? This is harmonics. This is a wonderful gentleman, Scott Carney. This is a software you have to pay for. He's known as the godfather of harmonics. It's a beautiful software program that he's written. I can post a link to that at some point in my Discord. Blue and yellow. Blue is the London session high and the London session low. And then you'll also see printed throughout the day, once that closes here, is orange is the Asian market low and purple is the Asian market high. This purple dotted line right here is the New York Midnight Open. So basically the algorithm resets at 12 Eastern, midnight every day. These things often act as magnets or liquidity sweeps. For example, there's a potential here with these two relative equal highs that we could see BATL actually run down back towards either equilibrium or the midnight open. So these are things to look out for. Up here, basic RSI. Down here, what's called amplified HSI, amplified RSI. That's part of Scott Carney's software. Amplified RSI is basically just a more reactive oscillator or indicator as opposed to a RSI. All right. Market's open in 15 minutes, so I am interested in the top 5 pre-market. 1, 2, 3, 4, 5. I want to make sure that they have liquidity. The way to tell if they have liquidity, BATL, like we were just looking at, is a 5-minute chart. Candles are looking liquid. They're connected. If we scroll down here, TPET is up 10%. Looks pretty decent, but if you drop to a 1-minute chart, that's actually pretty good. Let me find a better example of one that's horrible. This is horrible. EQNR, it's up 3%, but it looks like Atari. You're going to get wrecked if you try and trade any of this. These fair value gap signals that are forming mean nothing. There's fair value gaps everywhere when you're this pixelated. So try and trade something with liquidity. Liquid markets give you an easier way to fill your orders, buys and sells. You could put an order in on something like I just showed you and never get filled, or get filled at a price you don't want if you're doing market orders. One last thing I trade sometimes is ProShares. I prefer ProShares because they offer 3x, 2x. You got silver here, gold. So this is gold. This is the short for gold. TQQ. This is the short version of the QQQ. You can do the Dow, S&P, etc. But this morning we're going to focus on some volatility. Rick, when's the last time you traded any stocks?
I have never traded stocks. I've only ever traded crypto. But I'm guessing it's not too different, other than the gaps, the opening and closing and all that. But yeah, I mean, I've got money in the stock market, but that's through my retirement fund. But yeah.
Oh, yeah?
I'm on Bybit, which is a crypto exchange, or it started as one, and they do now offer exposure through derivatives to things like Apple, Nvidia, Microsoft, like all the big tech companies. That you can actually trade them derivative through that, and commodities like gold and metal and oil. Sorry, gold and silver and oil, precious metals. But yeah, these crypto exchanges, they've started doing that now that they're getting those other assets are popular and getting a lot of attention. They thought, well, let's create some markets around that and then capture more market action from our users. And yeah.
So if you draw your attention to the bottom right corner, is it showing up? Yeah. That green there, that, and hopefully it'll stay green. That is where I'm going to be displaying my P&L for the day. And hopefully I won't get wrecked in front of a whopping 40 people. And as you can see, we're up a whole penny today. I don't even know why. I don't have any open positions. Also, let's see. Right there, above it, also in the bottom right corner. Once we get some positions opened, I'm going to display what those positions are.
So how many more minutes do we have? It's 9:30 it opens, right?
Yeah. 9 minutes.
Yeah.
All right. Start looking for Oh, let's start with the top 5 here. What do we got here? All right. AAOI is up 56% pre-market. According to the news, Applied Optoelectronics is maintained by Rosenblatt. Key facts applied. Doesn't even matter to me. I'm not a big believer in fundamentals in news. The chart tells you what's going on. I'm not looking to invest this thing for my kids and grandkids. I'm just looking to trade it for the day and get out of it. I'm not looking to marry it.
That's fair enough.
Well, what's that old quote, Rick? Show me the news, or show me the chart. I'll show you the news.
Yeah, show me the chart. I'll tell you the news. Yeah, that's what I'm trying to focus on with this bear market in Bitcoin. Is like there's going to be a lot of horror stories that hit the press about Bitcoin, like hit pieces, and it's all noise. It's all just narrative stuff, and it happens every bear market. So just gotta, don't get too caught up in it, and think of it as actually a good thing if you want cheaper Bitcoin for buying.
All right, so you can see, looks like yesterday, AAOI broke out of the 15-minute opening range, broke out of the London high, came back, validated bullish engulfing, and then started taking off. I'm honestly a little weary about this one. This is a swing failure pattern here. I don't know if my bias for the day on this is going to be bullish. I think more likely at some point I would think get pulled back to retest the Asian high, maybe the New York midnight opening, which is around equilibrium. But again, I can get in and out in a 15-minute trade if the volatility is enough. So we'll see how it goes. But daily bias for this would probably be bearish. This is accumulation. You've got liquidity to both sides. This liquidity wick here was them. Here's a fair value gap. And it's hard to see because it actually gapped. That's a bullish fair value gap. I should just change this to a neutral color because I'm not going to be doing this every time. Green, red, green, red. Stop losses were obviously set right about here and they got taken out. And of course, right below the New York midnight open. Well, we'll see how this goes here, but on this 15-minute chart, it looks like a bullish fair value gap is potentially getting disrespected by a bearish fair value gap. This is a broken order block, like the one I highlighted on the PSKY chart. Maybe it'll come back down here, find some ground, take off. We'll see how it progresses. I would say it's important if you're going to be day trading to not just do regular trading hours. When you do that, you kind of lose context as to what happened. Really important to see how it traded during the other two major sessions in London and Asia. Asia is basically Hong Kong. I was saying to Rick earlier before we got on that I'm a little nervous day trading in front of an audience, I was telling my girlfriend the same thing. This is either going to do one of two things. It's going to make me a better trader because it's like, would you enter that trade and people were watching you, or are you getting a little gambly? And then the converse is just going to be, I'm going to be such a stressed out dude. I'm just going to do stupid shit.
I think you'll be more. I feel like it would discipline you more because you have to be on your best behavior when you're in front of an audience, as far as like following rules and yeah.
Yeah, just,
That's what I would
we'll,
imagine.
we'll see how this works. I'm afraid of boring people because it's not going to be like, oh, we're in a trade, we're out of trade, we're in a trade, we're out of trade. The VWAP. That's not how I trade. It's like 3 trades a day, sometimes 5.
Yeah.
It's really waiting for perfect setups and not chasing green candles. I mean, just the chart in front of me right here, right, Rick? Major, uptick. Oh, we're bullish. I buy. Well, no, then you get wrecked. But notice if you're patient enough, here's the 50 on the fair value gap, and it's come back. It's come back. So let the candles come to you.
Yeah. That's it. Follow the rules of your strategy. We're less than 2 minutes now.
2 minutes. I'm gonna smoke a cigarette. You want to tell him a joke, Rick? No pressure.
Yeah, I'm trying to think of a good joke. It's clean. Uh, Google, where are you? Bear with me, I'll find something. Here are the 27 best stock market jokes. I haven't read these, so I apologize if they're terrible. Why are nudists bad for the stock market? They are associated with bear markets. I don't think that's a good one. That's a long joke. I'm not going to read all that out. Okay.
All right. That was
Yeah,
just
these
a
are all
puffer too.
bad. Sorry.
That's all right. You know what we forgot to talk about this morning? Iran. My gosh,
Oh, Iran. Yeah.
chaos popping off there. That's good.
Yeah, there's
Definitely
a lot of
affect.
world events happening right now.
Yeah, like look at I don't know. Let's see what CrowdStrike is doing this morning. Well, we might see some manipulation here in real time. So this is a right before market open. That's your liquidity. This is a liquidity sweep.
Beautiful.
Here's your accumulation. That's a fib bar. I didn't mean to grab that. Oh, no. That's why you wait for candle closes. Here's your accumulation. Here's your London high. And we'll see how this progresses. Here's your order block up here in red. That's a bearish order block. Oh, market's open. I don't care about CrowdStrike. Let me see what's going on with these. Right now, we're working on our opening range. I usually don't make any trades before 9:45. I want to see what these things are doing. Also, at this point, switch over to. Whoa. Well, no, I don't want. That's delisted. Yeah, that would stay away from that. Anything with a D. What's this? TPAT. Is that on my list? Hmm. When did that fail? 5 minute. Yeah. 15. Yeah. There we go. Should probably get some of that free use YouTube music.
Yeah, it's something to fill the air. You're thinking. I got mine made by a Jeru.
Oh,
He just
CryptoUnc?
generated a bunch of. Yeah. Yep.
That reminds me. Obviously, Rick has a YouTube channel too. Crypto Down Under. UNDA. Right? Correct?
That's it. Yeah,
Um,
crypto down under.
definitely give him a like and subscribe.
Thank you. Yeah, check it out. My streams have been a little bit infrequent. It's not. I used to stream a lot more often, but yeah, every now and then when there's something to talk about, I'll do a stream. Remember to smash up sTAtic's like button, by the way. There's only 6 on there, I think, at the moment. And there's like over 40 people watching, over 45 people watching, 47.
Yeah, that also reminds me. Um, when this stream used to be up 4 years ago, 5 years ago, I mean, there were 3,000 views, 2,500 views. Definitely not expecting that. But I noticed this morning I'm demonetized because my account was so inactive that they just automatically demonetized. Um, point of the story is super chats. Anybody trying to send a super chat to ask about a chart or something like that can't do it. So I'll try and keep an eye on the regular comments section. And if you have any questions, I'll do my best to notice them.
Yeah.
Yeah, I guess to get monetized again, which allows super chats. I got the subscribers. You got to have over 1,000, but you got to have 3,000 watched hours, which means
You'll get there.
leave this stream open for me, will you? Because if 40 of you do this for 2 hours, hopefully in a month, we'll get super chats back.
Yeah, I was gonna send a super chat, but then I realized it didn't have the button available for it. But yeah, you'll get it. You'll get it soon enough.
Also, I have some alerts that I built, set up. And I don't know how loud they're going to be when they pop off. So if it's too annoying, please let me know in chat. I don't want to blow anybody's eardrums out. All right. AHL starting the day with a bearish fair value gap. There is a harmonic here. Deep crab. The HOP, which stands for harmonic optimal price, which is Scott Carney's software again. Plug to him. Getting eviscerated right now on this bearish fair value gap. I think Beyond was trading pretty crazy the other day. Figs.
Beyond Meat.
That's a good question. Is Beyond Bed Bath and Beyond, or no? It's Beyond Meat. Those are the guys that make the Impossible Burgers.
Probably. Think so. Plant-based meat. So right now you're just waiting for an alert to go off so that you can
Not
check a
necessarily.
trade, or okay.
I'm waiting for the first 15 minutes to establish itself.
I see.
Typically, like, so this green box here is the 15-minute opening range. You will see market direction based on breakouts. Now, again, it's never that simple because a lot of times what they'll do is they'll establish this opening range. And what they do like to do a lot of times is they like to manipulate and then go in the opposite direction. Sometimes they'll double manipulate. So you got to look for confluences. Smart money leaves breadcrumbs as to what their intentions are. All right, here's a potentially interesting thing here. Here is your obvious support. It's an equal low. They like equal lows. They like to come for them in both directions. People's stop losses are clearly down here. This giant wick candle swing failure pattern swept that liquidity, almost tapped the Asian low. And now it's working on either doing one of two things. This bearish fair value gap here is going to either get disrespected or it's just going to fill in that efficiency and continue lower. So we'll keep an eye on that. Here's another example of relatively equal highs, and they swept that. That's a liquidity hunt. This is a liquidity hunt. Everything is a liquidity hunt. And the overall picture is telling me that this is some sort of accumulation. If we zoom out to like a 1 hour, forgive the messiness of the chart, but I don't want to switch to default. Here's some interesting relatively equal highs.
That first 15-minute block is about to close,
Yeah.
huh? And that's like the ballpark. Like that's the sandbox to make the plays from, right?
Mm-hmm.
See how it goes.
Usually when I trade, I have like an A plus, A, B, C kind of rating in my head on a trade. And the higher the probability, the higher score, like an A plus. So I would put more money towards that trade. If it's like this is like a C, then obviously lower amounts. I usually trade in blocks of 10K, 5K, 2,500K, and 1,000. I don't know if anybody heard that alert go off for Xwell. If you could just let me know if it was abrasive. The beep.
I heard it and it was completely fine. Didn't sound crazy. Just a cha-ching.
Xwell, apparently I had a let me know when it crosses $1.69. Let me see why. Because it took out this liquidity here on the harmonic here. This harmonic pattern, it hit target one. With harmonic trading, type 2 return. So basically, after you hit target one, ideally you want to see it come back down. Could certainly come lower. Could come back to the HOP, the hop. But if you do get a target one hit and a retracement, and coincidentally, you'll notice that the hop is right in line with this block order right here. Your likelihood of a target 2 being hit is pretty good. If, for example, today something like that happens, that could be a 58% move. So that's something to keep an eye on for Xwell. You'll also notice that through the last session here, this is accumulation. So what do we look for? We look for a manipulation, right? And then a distribution. So this could be a manipulation move working here. This could be distribution off that accumulation. And then we look for additional accumulation and then some manipulation. Maybe, I'm just waxing philosophical here, but let's pretend that we see something like this. Manipulation, distribution, reaccumulation, and then imagine this. They dip down to this block order. There's your manipulation. And they take it to a target too. Something I'm going to try and keep an eye on. I'm not going to chase this one. Right now I'm going to put a alert down here to let me know if we get down to these prices. And you know what? There's no promises it will. You could certainly just say, you know what? Static, we're just going to bounce right off of this and we're going all the way up here. And if that happens, oh well, that's fine. I don't have to be in every trade. Here was some liquidity grab right here. Took out this liquidity, failed to close on the second candle. That's usually indicative of them going to fill in an imbalance, a fair value gap. Oh, shout out. We had 43 viewers. Turbo pointed that out. 43. It's an old school reference for the OGs. In my opinion, when do I see BTC returning to 120K levels? 2.5 years, roughly. I mean, if you go to the 4-year cycle, we would see a bear market bottom in October of this year. There is, which I can get into deeper another day, a working theory that I wouldn't say I support, but I could see happening, that we get a shorter bear market. Typically, they last 12 months on the 4-year cycle for crypto. I could see one that comes in as early as March. We've had some pretty strong velocity to the downside from 126K to where we're at in a very short period of time. And one of the things that lines up in March, I know I said I'd get into another day, but apparently I'm doing it right now. Jerome Powell, head of the chairman of the FOMC, steps down in March and is replaced by a Trump appointee. Not to be political, but to be objective. I think we can agree that when you look at his other appointees, his Cash Patels, his Pam Bondis, et cetera, his Christy Gnomes, they're pretty sycophantic. They do what the boss wants. And what the boss has been talking about is his displeasure with interest rates and things like that. He wants interest rates lower. He wants money printed. So if Jerome Powell steps down and there is an appointee put in his place that chooses to follow the instructions and wills and wants of President Trump, we could see some money printer go burr. We could see interest rates come down, and that could pop off the next bull run for Bitcoin earlier than normal, which could make sense why the powers that be, the smart money, are dragging Bitcoin down so quickly, because they're not targeting October. They're targeting, March, April for a bottom. All right, this one popped off, but there is no liquidity, so I'm going to delete this one from my chart. Not interested in that one today. Okay. USAG down. Still in range. Still in range. Still in range. Bullish engulfing candle. This is another indicator I built, which I could set to alerts, but I don't do that. But basically, I've got it programmed to, when I get a bullish engulfing, to let me know. For anybody who doesn't know, bullish engulfing, literally described in the word, it engulfs bullishly the previous candle. Not all bullish engulfings are of equal importance. You want to see a couple of confluences. You want to see volume higher than average, higher than the SMA on the volume. And you want to see it, at an area of, here we go. Here's a better example. See, these are bullish engulfings that are just in the chop, in the accumulation. Now you get a breakout. Here's a fair value gap. Fair value gap. Targeting all of this liquidity. All of the people who wanted to go short, they had all their stop losses up here. Market makers moved, came back, revalidated it, came back and tapped that fair value gap with the bullish engulfing, relatively, and then surged it with increasing volume. So this is a more important bullish engulfing than any of this who shot John over here. Whoa, big correction. All right, beyond meat. I got notified with my indicator that we got a breakout, and it is definitely wasn't confirmed because the very next candle popped back down. Right now we got relatively equal lows right here, and we got liquidity that got taken out. Everything above here is now gone. That was the stop hunt. Now here is your bullish order block. It's the last bear candle before an uptick. And it could, there's two ways to look at this. With the wicks or with the body, I usually prefer to do the body. That sounded weird. That's what she said. Rick, do you prefer to do the body? Rick probably fell asleep. This one's interesting. Yeah. That's taking forever. ABR. All right, so this is a bullish fair value gap that just got its butt kicked. Typically, when you see this, it's pretty unlikely that all of a sudden it's just going to go. This is probably headed down for the day. You might get a back test here of somewhere in this fair value gap. If you're looking to short this, you would basically lay out the fair value gap on the bullish side and then lay out the fair value gap on the bearish side, which we got to wait for this candle to close. Still have 2 minutes to establish that range. But let's say it closed just like this. You would then place an entry on a short right where these two, I just pointed at the computer screen with my left hand like you guys could see. Right here where the two intersect, and your stop loss could either be on the other side of the 50, or if you want to get a little more not conservative, this would be conservative. This would be tight. Wider range prevents you from being the victim of manipulation. And then you would target either a fixed, 1-to-1, 2-to-1, whatever you feel comfortable with, or some sort of point of interest here. What is this at? 59.38. Yeah, we're almost there. So next stop would be these block orders down here. 53.18. But we'll have to see how that candle closes. See, right now it's coming back. Well, now that one stays there. $30 seconds on that one. I'm not shorting today anyway. I'm looking along. This one's interesting. The problem is there's no liquidity anymore. This liquidity got taken out. This has been taken out. That was how it got taken out. And now anybody who had stops up here got taken out here. So now the question becomes, I'm going to put an alert right here. Netflix. All right, what's a little disconcerting about this setup here is here's the relatively equal highs that they took out. What I don't like about it is they didn't fair value gap it. They fair value gapped it down here. But what you like to see when you break liquidity points is a pretty impulsive move. I want this candle to be here. This just looks kind of like on a higher time frame. If you go to the 15-minute, 1 hour, there is a fair value gap. That's something I'd have to watch on a longer time frame because on the 5-minute, not really a big fan of the setup right now. Boy, almost everything is stuck in its ranges. This one's going down. All right, let's go to the very top here and check out some ones from the other day. Nope. Can I get TA on Iran futures? Allahu Akbar. Hmm. Well, this has potential. JOBY, accumulation pre-market. Here's your manipulation. And now we are headed into distribution, except we kind of missed it. So if we were to get interested in this, where would we? Oh, we have a harmonic, a shark, and a bat. Target 2. We need an entry point. Well, yeah, this is something we're going to have come to us. Let's see if it comes down in this area at any point. Mara. See, this is where I'm nervous with this YouTube stream and this concept and idea, because I don't want to be boring. And watching me sit here for a half hour, not trading, certainly not entertaining, but I don't want to force myself to trade when the market is not. It's very choppy this morning, with the exception of a couple. So I guess our target, the two I'm interested in right now, was what? Saber, Joby, and Mara, I think, right? Yeah. So these are the three I'm kind of focused on. We'll see what they want to do. Definitely can't enter these now because the candles have moved already. Looking for a pullback. What do we got here? Order block. Did tap. It's a swing failure. Oh, Joby. He is taken out here. Yeah, this Beyond has a disconcerting amount of volume here on this move. Netflix. Hmm. Those two don't want me to get in. Not going to give me an opportunity. Hmm. It's a high, that's a low. So this is our DRT right here. Breaking the 25. It's only 2%. Circle looks like a break. That's what somebody wrote. Let's see. Oop. Oh, you meant circle the crypto? No, circle here. Internet group. Gap through the London high. Two swing failure patterns. Yeah, I suppose if we were to, let's see. Okay, block order here. I'm going to stay on this chart here. This has piqued my interest. And I'm going to buy. What the hell? Worst case scenario, we lose some money. What are we in at? We're at 269. Appropriate stop loss right here below the double. We're going to put that in. What does it look like on the 5-minute? Three to one. Yeah, what the heck? 245. We'll go 244. I'm actually going to adjust that to 230. Not because it's coming down, just because that's where this block order got filled. Yeah, the theory here, and we'll see if it works out or not. And if it doesn't, it's fine. Can't win them all. This could have been a liquidity sweep. It took it out, closed back above. This is your bullish order block. Came down, retested the bullish order block with volume. This was the start of it. Inverted fair value gaps. Fair value gap, back tested, stayed above the 50. Now I think it's just retesting this fair value gap. On a 5-minute chart, this certainly could have been a liquidity sweep, but I think we swept the equilibrium point, so I'm hoping to get it back test here. And we'll see what happens. But that'll be my trade of the day because it is 10:30, 10:25. And we're doing this 8:30 to 10:30. I'm going to shut the stream down in 5 minutes. Tomorrow when I go live, we'll see how this trade worked out. If you want to watch the trade on your own in real time, TMDE stop loss for me right now is at 230. Take profit, I'm targeting about 331. And the best thing you can do when you're trading is get in, make your case for yourself, set your positions, and then walk away from the computer. Because staring at it, you're going to want to do one of two things. You're going to see it start coming down, you're going to panic, you're going to get out, or when it finally does start to take off, you go, okay, I better take profit now. And then you end up, losing out on potential gains there. Good morning, Cubes. I see you in the chat. Thank you, Mel. I guess let me go through the chat here real quick for the next couple of minutes. What did I miss here? Anybody had a question? Circle. Is Vinny in there? Yoda? What's up, everybody? I do feel like I forced this trade a little bit just for the purpose of the stream. Still has strong potential, though. Circle. See if that's still breaking out. Tame in here. Stop it. All right, guys, it's 10:30. Do me a favor. If you're not following me on Instagram, it's truestatic.25. And the Discord is free to join. You can hit me up in DMs if you're not already in the Discord. I suspect most of you are. Yeah, that's it. I hope everybody has a good day, and I will be back tomorrow at 8:30.